All right, today we're going to do something fun. We're taking a deep dive into a technical analysis report for the stock CMG. We're going to crack it open, look at all the key signals, and figure out what they might be telling us about where this stock is headed.
So that leads us right to the million-dollar question, doesn't it? After a pretty significant drop, is CMG a fantastic bargain just waiting to be snapped up, or is it a classic trap for investors who jump in too soon? Let's dig into the data and see what we can find.
And here it is, the central puzzle, pulled straight from the report. You've got these two massive forces pushing against each other. On one side, you have a strong technical downtrend. That's the big, powerful current pulling the stock down. But on the other side, you've got short-term oversold conditions, which is a fancy way of saying the selling might have been pushed way too far, way too fast. Unpacking this exact conflict is what this is all about.
Okay, so first things first. Before we get into the weeds, let's zoom out and take a look at the big picture. What's the overall vibe here for CMG when it comes to risk and reward? The report uses this really cool idea they call a risk thermometer. You could think of it just like that, a quick temperature check for the stock. It blends a few key stats to give us a really fast, easy-to-understand snapshot of its health and how it behaves out in the wild market.
Okay, so let's take a look at what this thermometer is actually telling us. First, that beta of 1.26 means the stock is more volatile than the market average. It tends to swing around about 26% more. Second, no surprise here, it's hanging out very close to its 52-week low. But here's where it gets really interesting. That risk/reward ratio of almost 7. That suggests that from this point, the potential upside could be almost 7 times the potential downside. That's a balance that definitely gets your attention. Okay, with that big picture in our heads, let's start digging into the evidence for that downtrend. What are the charts actually saying?
Now this is like Exhibit A for a downtrend. Moving averages just show the average price over different time frames, and you can see it right there on the table. The current price is way below the short-term 5-day average, the medium-term 20-day, and most importantly, the long-term 200-day average. I mean, it doesn't get much more textbook than this. The trend is clearly pointing down.
And just in case there was any doubt, the Aroon indicator basically seals the deal. This tool just measures the strength of a trend. And with the Aroon Down line cranked all the way up to a perfect 100, it's screaming that the sellers, the bears, are totally running the show right now.
So, okay, the downtrend is pretty clear-cut, but this is where the plot really thickens, when we start following the money and looking at the trading volume.
And right here, we've got a major head-scratcher. On one side, you have indicators that show that over time, more money has been flowing out of the stock than into it. That's bearish. But on the other side, the trading volume lately has been way higher than usual. This creates what's sometimes called a volume trap. It looks like a lot of interest, but it might just be a ton of sellers all rushing for the exits at the same time.
All right, this leads us to our third big clue. We know the downtrend is strong, but is it finally running out of steam? This section is all about reading the market's mood and trying to gauge if the selling pressure is reaching its limit. First up, the RSI, or Relative Strength Index. The rubber band analogy is perfect here. Anything below 30 is considered oversold. At just over 19, this stock isn't just stretched, it's stretched tight. And we all know what happens when you pull a rubber band that tight, right? It's itching to snap back. This is a huge signal of a potential bounce.
And if you thought that was extreme, check out the Stochh RSI. This is like a super sensitive version of the RSI, and it's reading 0. That's the absolute lowest it can possibly go. It's basically hitting rock bottom, flashing the brightest possible signal that we might be at a short-term low.
And just to hammer the point home, look at the CCI, the Commodity Channel Index. Normally, a reading below -100 is considered very oversold. CMG's reading is a jaw-dropping -533. So you've got 3 different gauges, and they're all screaming the exact same thing. The sellers might just be completely exhausted. Okay, so we've got this epic clash, right? A powerful downtrend versus signs of total exhaustion. So where is this battle going to be fought? It's time to map out the key battleground prices.
And this map lays it all out for us. It's really simple. The resistance at 34.10 is the ceiling the sellers are trying to protect. The support at 30.98 is the floor the buyers are trying to defend. And that pivot point right in the middle, that's the current front line. Whatever happens next, it's probably going to be decided right here, at these levels.
So, with all this conflicting evidence on the table, where do we go from here? Well, the report doesn't just leave us hanging. It lays out 3 possible futures for the stock.
Let's walk through them. First, the bullish path. If the buyers find some strength and push the price through that 34.10 ceiling, the next stop could be 3600. Then, there's the bearish path. If the sellers stay in control and break that 3098 floor, the downtrend could easily continue down to 2800. And finally, the neutral scenario. Maybe nobody wins for a while, and the stock just chops back and forth between that floor and ceiling.
And that brings us right back to where we started, to that core conflict. You have this undeniable, powerful downtrend, but you also have multiple indicators just screaming that the stock is stretched to its absolute limit. Look, this report isn't a crystal ball. It doesn't give us the answer. What it does give us is a map of the battlefield and the key lines in the sand to watch. So the massive question it leaves us with is this: which of these two powerful forces is going to break first?